Hey everyone, and welcome to The Explainer. Today we're diving into a really unique, highly specific real estate strategy. And this is laser targeted at a very particular group. Homeowners who have their properties listed on sites like Zillow or Redfin. But not just any homeowners. We're talking specifically about people trying to sell their homes themselves, without a traditional agent. We're going to unpack a pitch and a whole process from a source text by Kevin Young Sr., which basically proposes a totally alternative route to the traditional real estate market.
Right out of the gate, the source text hits you with this incredibly blunt question. Are you wasting your time? It's completely designed to hook you by tapping into a very real, honestly agonizing frustration in the for sale by owner world, the waiting. You know how it goes. You list your house, you stage it, you take the photos, and then crickets. You just wait for a buyer who actually has the ability to walk into a bank today and secure financing. Well, the source text argues that this whole traditional waiting game, it's completely unnecessary. But, and this is a big but, only if you meet one specific criteria. You have to own your home free and clear, as in absolutely zero mortgage.
All right, let's get into Section 1, the FSBO waiting game.
So, what's really wild here is the hidden financial drain of simply owning a property, even when you don't owe the bank a single dime. The source points out that while your property is just sitting there, stuck on the market, you, the homeowner, are still entirely on the hook. You're paying property taxes, you're shelling out for homeowners insurance, and you're covering all the maintenance and upkeep. It's like a leaky faucet on your bank account. Every single day that house sits unsold, waiting for a buyer to finally get bank approval, is a day you are literally burning money on ongoing expenses.
And this perfectly highlights the core conflict the author is pointing out. On one side, you have the typical traditional buyer. They are totally dependent on bank financing today, and they're notorious for going back and forth, haggling over your asking price. It's exhausting. But then, contrast that with the ideal buyer. This is someone who comes to the table with a big down payment and, crucially, is willing to pay your full asking price. No haggling. The pitch we're examining today claims it can actually bridge the gap between your unsold home and this dream buyer.
Moving right along to Section 2, Temporary Seller Financing Explained.
So how exactly does the author propose we bridge that gap? Well, here's the definition pulled straight from the source material. Temporary seller financing is presented as a structure used to sell a home really fast and for the full asking price. How in the world does that work? By having the seller who, remember, owns the home free and clear, step in and act as a short-term lender for the buyer. So instead of the buyer going hat in hand to get a loan from a traditional bank, they are essentially getting a temporary loan structure directly through the seller's equity.
Now here is a number that's going to make you sit right up. 45. The author, Kevin Young Sr., explicitly states that his specialty as a temporary seller finance specialist is getting these properties sold in 45 days or less. That doesn't matter if it's a brand new posting or an old, stale one, 45 days. That is a highly specific, super aggressive timeline being pitched directly to sellers who are just sick and tired of waiting.
But hold on a second. If the seller is acting as the lender, does that mean you're tied to this property, playing banker for the next 30 years? Well, actually no. The source text tackles this head-on with another vital number, 12. The text explicitly states that all of these temporary seller finance transactions are structured to wrap up in 12 years or less. So it's really positioned as a short to medium-term bridge. It is definitely not a permanent, lifelong loan arrangement.
Let's actually look at a direct quote from the text, just to really capture the exact mindset they're presented here. Quote, "There is no need to keep wasting time hoping to find a potential home buyer who can walk into a bank today and secure financing." The entire premise of this pitch is built on completely bypassing the traditional banking bottleneck. It's a huge appeal to a seller's desire for efficiency, completely rejecting those standard real estate delays we've all come to expect.
Okay, let's look at the nuts and bolts in Section 3, how the process works. Now, obviously, an idea is only as good as its execution, right? Before we map out the actual steps, it is absolutely vital to look at the disclaimers provided in the text. Kevin Young Sr. identifies himself strictly as a temporary seller finance specialist with Nationwide Real Estate Acquisitions, LLC. He is very clear in the text that he is not a real estate agent, he's not a broker, a lawyer, or an accountant, and he notes he's not giving out tax or legal advice either. His role, as he outlines it, is purely to facilitate this specific financing structure.
So here is how the source claims all that heavy administrative burden is lifted right off the seller's shoulders. Step 1. This isn't some informal handshake deal. The transaction is processed through licensed third-party service providers. We're talking mortgage brokers, title insurance companies, and attorneys where applicable. Step 2.
The homeowner does not have to sit around collecting monthly checks. That whole headache is handled by a third-party note servicing company, and get this, the text notes this is done at the home buyer's expense. Step 3. Because the buyer is bringing a big down payment to the table, the text claims this process allows you, the seller, to walk away from the close of escrow with the cash you need to move on to your next property. Meanwhile, the rest of the ongoing payments are just handled quietly by the servicer.
But what about the risks? That brings us to Section 4, Safeguards for the Seller.
I know exactly what you're probably thinking right now. Okay, this sounds very structured, but what on earth happens if the buyer just decides to stop paying? Well, the primary safety net outlined in the source text is something called mandatory mortgage protection insurance. According to the pitch, the home buyer doesn't just, pinky promise to pay. They are strictly required to purchase and maintain this specific insurance immediately upon accepting the terms. And beyond that, the buyer has to physically show proof of this insurance before escrow can even close. No proof, no deal.
So what exactly does this mandatory insurance actually do? It's basically designed to protect your income stream if an absolute catastrophe strikes the buyer. The text explicitly lists out the covered events. We're talking unemployment, job loss, severe disability, and accidental death. The logic they're presenting here is that if the buyer literally cannot physically or financially make the payments due to one of these massive life events, the insurance policy steps right in to protect the seller's financial interests.
Let's actually walk through how a claim would play out in real life, according to the document. First, a qualifying event happens, say an unexpected job loss. Second, the homebuyer is required to submit their claim to the adjuster within a very strict 30-day window. Third, the adjuster steps in and performs their due diligence to prove the claim is legitimate. And fourth, and honestly this is a critical detail in the text, after that processing period is over, the mortgage protection insurance kicks in with retroactive back payments that essentially ensures that the monthly payments keep flowing to the home seller without any missing gaps from the whole processing period.
Just to be completely thorough and reporting directly from the source document here, the text does end by directing any interested for sale by owner folks to a specific point of contact. The website they list is temporaryfinancespecialist.com, and the phone number provided right in the text is 913-583-2148. That is how the author invites sellers to reach out and actually initiate that 45-day process we just broke down.
Which brings us to a pretty massive, thought-provoking question to wrap up our explainer today. Based on the structures, the third-party servicers doing the heavy lifting, and the mandatory insurance safeguards outlined in this pitch, if third parties are handling the administrative risks and the insurance is handling the default risks, is traditional bank financing really still the only way to sell a free and clear home? It absolutely challenges the conventional wisdom of the real estate market for sure. I really hope this explainer has given you a clear, structured understanding of exactly how this temporary seller financing strategy claims to work. Thanks so much for joining me, keep learning, and I'll catch you next time.